Well, why don't we start here? So you and I are good friends. We met about, I don't know, around 2015. You were hosting a fireside chat with Liesl Pritzker. We happened to be in Nantucket, and as I remember it, we're amongst the only two people of color at the entire event. So we had that affinity right off the bat, and bumped into each other in the hotel and decided to play hooky for about half a day. Enjoy the beach and get to know each other a little bit better. And we've been fast friends ever since. So I'm really glad you can join us. And I think that leads me at least to one of the first questions I had for you is, with so many things that have changed since we first met, it's the holidays, so we'll keep it upbeat. But what would you say are some of the more positive developments within Impact from where you sit?
Yeah, absolutely. And I remember that day quite well. It was a kind of a warm, day in I think in mid-July in Nantucket, right? It was kind of like the perfect day to be on the beach, and everyone else was stuck in a conference room.
Yeah, I mean, it was a much better use of my time to have met you and be able to do that. Chintan, did we lose you?
Mike, it's Robin. We did lose him. But when he comes back on, he should have full permission.
Okay. Folks, bear with us for another moment or two.
I'm putting you back as host.
Hey, Mike. Hello? Can you hear me?
Yeah, sorry, we lost you for a second.
Okay. I somehow I just got kicked out of the Zoom meeting. But there's no video option anymore. All right, we'll just go with no video, and just roll with it. Yeah. So your question's a really interesting one, right? Kind of in terms of how has the field and the space developed since, what was that, 2015 probably, when we first met. And it's developed in so many interesting ways, right? I mean, I think first and foremost, back then, people used to talk about one day when, the rest of the world does impact investing, or one day, investing, all investing will be impact investing, right? Can you hear me?
Yep.
Okay. Something just changed again. Hang on one second, I'm getting a. Okay. All right. I got booted out again, and I'm back in again. So what I was saying was that, what's obvious to many folks right now is that impact investing is everywhere, right? And it comes in all different shapes and sizes and labels, attached to it. But this idea of conscious capitalism has entered the broader national consciousness, or global consciousness when it comes to investing, when it comes to corporate responsibility, and that has been driven by positive and, unfortunate factors, right? So positive factors, right? This idea that doing well by doing good, which is kind of it's like a slogan right now, right? But I remember, the first time, I heard, somebody, describe it that way, maybe 10, 12 years ago. That idea has really caught on like wildfire. Right? It's a very compelling idea, and it's a very attractive idea. As you and I both know, it's not so easy. It's definitely doable, and there are countless success stories, but it's not inherently easy, right? That's one positive, driver of this kind of ubiquitousness of impact. The other, of course, is less fortunate, right? Kind of these social justice movements, the urgency around climate change and environmental degradation, George Floyd, Breonna Taylor, like these kind of, these events, these, kind of developments around the world have also become front and center in the national conversation. And this idea that impact investors have had all along, that by engaging in multiple bottom line, intentional investing, business building, field building work, by identifying and investing in targeted solutions to big challenges, that you can, that you can do this, and there's a body of work of success along these lines. These, tools have gotten picked up. And so from a positive perspective, I would say that, for better or for worse, impact investing is on the lips of every major financial institution, every, major law firm, accounting firm, bank, advisory shop, consulting firm. Corporate social responsibility is on the front homepage of every major corporation. You're seeing it everywhere. And so this idea has really spread. It's really caught on, and it's really spread.
Yeah, so with that, and so one of the things we talked about is, it is a double-edged sword. So in your position, or from you, where you sit, do you view that as a net positive or maybe a net negative?
Yeah, that's a good question. I mean, I think it's hard to put it into a box, right? I think that there are positive aspects, and I think there are, of course, negative aspects, right? So in terms of the positive aspects, this is investing, right? And so you need capital, you need intermediaries, you need advisors, you need expertise around the world, around the various different levels and sectors of these industries, right? And the fact that you have a lot of infrastructure, you have a lot of capital flow, you have a lot of intention, that to me, I think is definitely in the positive category. On the negative side, I think greenwashing, and the other, similar activities around that, right? This idea that, impact isn't really something that people are engaging in because they believe in it, but rather because it's hot, or there are a lot of, investors or a lot of capital to be kind of gained by doing it. So let's just, put on a skin, right, so to speak, or, wash this thing, this product, opportunity, company, whatever, as something that is green or pink, i.e. kind of female supportive, or, blue, kind of water conservation and, and the like. But, that to me, that's one significant kind of challenge, right? Because that, in some ways, it's kind of the most insidious thing, right? Because that is an authenticity challenge. This idea that this is all just smoke and mirrors, it's all just marketing. It's this idea that it's not genuine and it's not authentic, i.e., we're not actually investing in real solutions to actual problems. That idea is, I think, extremely dangerous. And I think that there are a lot of opportunistic folks out there who see this as just an opportunity to kind of engage in a cash cow, right? And that has, I think, significant negative implications. I think it carries a lot of risks that maybe don't exist in some of the other industries out there.
Yeah, so can you talk about that, like some of the negative externalities of people who are kind of, I guess I call them tourists in the impact or ESG world, just trying to make a dollar and move on. Can you talk a little bit more about that?
Yeah, absolutely. Mike, give me, hang on, bear with me for 1/2 of a second. I just got some instructions in terms of how to get back into this thing.
But I think you have video. You should have video access now.
Yeah, okay. No, it's saying you can't start your video because the host has stopped it. So whoever the host is must not want to see me today. So, all right, well, why don't we keep going? If host is able to enable my video, just ping me and I'm happy to turn it on. So sorry, tell me your question again, right? Impact
So
tool.
just, I've seen it from where I sit in terms of just people here to make a quick buck and repurposing funds as kind of ESG funds, because that's the hot thing in the streets. So what are some of the negative externalities like you're seeing from your
Yeah.
spot?
So listen, I want to be careful and make a good distinction, right? There are people who, maybe they, kind of have a fund or a product, or they are running a company, and they've kind of been turned onto this idea, and they recognize the inherent value or the potential value in this idea. It's a very compelling thing. I think that part of this idea here is to really broaden the tent, right? To bring as many well-intentioned, authentic folks into the space. And in fact, I think that since the beginning of of my, kind of journey in this space, one of the best and most compelling things about working in this industry is that by and large, the vast majority of people are in this space for the right reasons, right? This is a really amazing community of incredibly smart, talented, visionary, and decent, good people, right? Now let's talk about, the folks who may just say, well, I'm skeptical. I think, this is all BS and it's all marketing speak. I've been hearing, I've been reading articles, particularly in kind of conservative media, calling this corporate wokeism, various different kind of ways of attacking or kind of, shunning this idea that you can, do well by doing good, right? That idea is out there. It's been out there for a long time. In fact, the fact that impact investing is kind of a thing right now is, that it's a counter idea, counter current to the prevailing attitudes of the last couple hundred years, that business does business and philanthropy does philanthropy. And, those are two separate pockets. They don't do, they shouldn't be trying to do the same thing. And in some cases, maybe that's true. But what we've seen and what we've proven is that in so many cases, you can invest in solutions to problems. The negative externalities, of course, are that you're not actually moving the needle. You're not making a dent in these problems, in these, this is just investments in things. And we've seen this, right? You've seen scandals, but, and allegations that certain companies that claim to use, natural or organic products, or, kind of be better for you or your health or whatever. And that's all just, it's not supported, right? We've seen, the SEC get serious about holding issuers to account for, if you say you're going to actually, improve the environment or improve health outcomes in this way, and that is a statement that you make to potential investors, and we're going to apply the 10b5 rules to those statements, just like the statements that you make about, the potential returns that your investments are going to get, right? So, we've seen people getting serious, maybe belatedly, about these issues. But the externalities, I think, the worst case scenario is that the entire industry gets painted with a broad brush, because there are so many, there happen to, be so many people who enter the space and are effectively, fraudsters or inauthentic, and you have this counter swing, right? The pendulum swings backwards, and people start running away from this space in the same way that, right now we're seeing people running towards it, right? So I think it's a delicate thing, and I think it's important for investors, for customers, for consumers, for vendors, counterparties, right? To actually be thoughtful, to be intentional, to really think about, what is it that we're trying to achieve? What are people saying, and how are they actually doing that, right? Don't take it for granted, I guess, is what I'm saying.
Yeah. And we'll just use that as a nice way to pause. If you're one of the attendees and you'd like to post a question, please post a question in the chat. We'll be saving a little time at the end to answer the questions, but if there's something interesting that comes in along the way, I'd love to be able to address it. So one of the positive things we talked about in terms of the influence that impact in general has had on society writ large, and more importantly, corporate America, is this idea of a stakeholder mentality taking hold. And what I found interesting, you wrote about the Great Resignation a couple of weeks ago, and it was a really interesting article that I hopefully you all will have the opportunity to read. But it seems like in order to combat what we're seeing in the exodus from certain industries or certain jobs, is this idea of being a stakeholder. You're from the companies that you work with and all the funds that you talk to, are you seeing this take hold in a really substantive way?
Yeah, I mean, I think, it's a great point you raise, right? Kind of it's in many ways, the level of, the level deeper than what we were just talking about, right? This in terms of the positive, right? So people kind of coming into the space. What does that mean to come into the space, right? And I think in many ways, it's really what you just said, right? It's this idea that you start thinking about, stakeholders as opposed to shareholders, as opposed to is you start thinking about all of the different people that are sitting around the table. In many ways, I would say that is the, when people are saying, how do I get involved in impact? How do I take my company and become an impact company? How do I start doing this? In fact, the very first thing that I, not just myself, right, but many folks recommend is to take stock of who the relevant stakeholders are, who's affected by your investing activity, by the business activity, by what it is you're doing. And, you start looking at, right, you start thinking, all right, well, I have, as a business owner, right, I have employees, I have vendors, I have customers, I have competitors. My business operates in a local community. I have, here we have a list of, this kind of initial kind of stakeholders off the top of my head, right? So now let's talk about employees. So, a lot of people have written about this, and there's a lot of material I read when I was thinking about kind of this article itself. And this idea that is even codified in tax law, that employees and employee salaries are listed as a liability on a company's books, is an interesting idea, right? This notion that got somehow codified into law, into tax law, right? That says, all right, well, how are we going to look at our employees? Well, let's look at them singularly from the lens of the fact that we have to pay them and therefore they're a liability on the book. I mean, that, I don't think most people in their minds think about it that way. Most business owners think about it that way, but that's how it's accounted for. That's how the entire tax system works. That's how the accounting, so that's how GAAP accounting looks at it, right? And so this idea that employees are more than just a liability, or are more than just an input that that goes into whatever, in a service business, you're selling time, or in a manufacturing business, part of the cost structure of developing, a product, et cetera. This idea that employees are people and they're holistic, and, there's a lot more to a company's engagement with its employees than just the fact they show up, punch a clock, do work, punch a clock out. They got to make sure that they were there for the requisite number of hours, blah, blah, blah. That mode of thinking is, in my view, part of the problem, right? Part of the solution is taking a stakeholder approach and saying, these are people, and we actually care about these people. And if we want them to care about the results of this organization, to care about this team, it starts with showing them that they are in fact teammates, and that the team cares about them, that, that's where it starts, right? It doesn't start by saying, well, you're a liability, and I'm going to make sure I can squeeze every drop of production out of you so that I can make the ledger balance, right? Because I had to pay you X, and I have to make sure that you produced X plus Y for me. Now, obviously, these are businesses, right? So the numbers still have to work, right? This is the impact economy. This isn't the impact of philanthropy, but even philanthropies have to sort of balance their books. So, that's not to say that this is counter economic. This is bad business. This is, I just want to dispel those, I think, stupid arguments, just from the get-go, kind of annoying arguments to many folks, right? The data clearly shows that, we'll just start with, the turnover cost of an employee is about 125% of their salary. So just the fact that you may be able to retain people better by treating them as holistic human beings should yield a 25% savings to the bottom line. Okay. So, but even put that aside for a second, and let's talk about, the fact that when people are motivated, all the research that talks about motivation, performance, capabilities, kind of top grading and upgrading talent within your own organization, there is, all you have to do is go and look for it, but there's countless there is countless data. There are a number of very well respected kind of empirical as well as anecdotal studies on these topics, right? You look at kind of the major business journals, there's probably an article about this every month, right? This kind of employee performance, et cetera. And so, being a conscious company, being a conscious leader, these are the things I think that are counter to this question of the Great Resignation. At least that's kind of my philosophy on it.
Well, definitely, I would agree. I mean, especially for those of us in service industries, viewing it as a liability seems kind of counterintuitive.
Totally right.
When your largest asset is going up and down the elevator, it's kind of a hard case to make.
Exactly.
So why don't we switch gears here for a minute? So we both had the privilege of working with some incredible clients over the last 20 years or so since I've been in the industry. When it started out, the talk of aligning somebody's portfolio with their values basically boiled down to just eliminating the worst corporate actors from their portfolio. And there wasn't much being done beyond that. And now that we're in an environment where it's relatively easy to align portfolios, at least as far as the public markets go, there's a little bit of mission creep. And for those clients who are tremendously successful and coming from families, they want to do a lot more in the world and they have really ambitious goals. So tell us a little bit about what you're doing for those clients, kind of stretch what they are capable of doing and the change that they're creating in the world.
Yeah. No, it's a great question, right? In some ways, I get versions of this question, a lot. What is an impact lawyer? What is a law firm that's focused on impact? What does that even mean? What do you guys do? And how is it different from what you all did when you were just regular lawyers, or what my cousin who's a regular lawyer, what's the difference between what you guys do and what they do, right? And it really kind of comes down to the question you asked, right, which is, what is it that we do for our clients, right? So the first step in that is actually defining what is it that our clients are doing, and then we can kind of start diving into what we do for them. But as well, you and I share some clients, and our clients all run in very similar circles, and we get a chance to advise from different perspectives, many of the same types of folks. And just for the kind of audience's context, RPCK's clients are primarily family offices, private foundations, public charities, venture, private equity, debt, mezzanine, hybrid funds, right? So fund sponsors, fund managers, operating businesses, most of which are building kind of impact economy infrastructure, right? And one of the ways in which RPCK is maybe somewhat unique is that we really only seek to work with people that have a multiple bottom line orientation to what they do, right? Somebody comes to us and says, hey, I want to do X, Y, and Z. I usually ask them why, some form of the question why. And if the answer is, because it's a great opportunity, I can make a ton of money, blah, 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 whatever. It's like, awesome, that's fantastic. There are lots of really great lawyers out there. We're probably not the right fit for you, because what we're trying to do is focus on these clients, which we describe as visionaries who are looking to make meaningful change in the world. It's just, those are the folks that we really want to work with. And so these, so now let's talk about what those folks are doing, right? So these are folks, whether, let's say it's a family office, right? It's a large asset owner. They have the ability to deploy their capital on a different time horizon, for example, than a fund manager or a retail investment. They have the ability to drive, in many cases, larger sums of capital towards a business or a strategy. They have the ability to take a systems-based approach to investing. Aha, there we go. Okay, I'm no longer the disembodied voice. All right, whoever did that, thank you, and thanks for helping get this thing set up. So these are folks who are saying, all right, well, I can take my capital, I can use it to make myself a return. I'm going to define what that return should be for me, and usually that's a complex and sophisticated thing that folks like you are helping figure out. But once that's determined, then what people are saying is, all right, I can move the needle on these big problems that I care about by investing in solutions, by investing in people, in companies, in funds, in a variety of kind of economic participants who are working on building market-based solutions to these problems. These problems include homelessness, include maternal health, include literacy, include food insecurity, include energy and grid resilience, include climate change, include social justice. I mean, it is across the board in terms of the types of folks that we work with. I don't have a strong opinion on what a given client of ours cares about, but I want them to care about something more than just, I made a couple bucks, awesome. And that's cool. I have no issue with that, right? And in fact, that's how a lot of the folks that we work with got to where they are. And now they're in a position to be able to do these things. So I have no issue with that. It's just that as an impact firm, we happen to have a lot of experience, a lot of tools. We happen to have been down a lot of these different roads and have tested these different structures, tools, approaches, ideas in terms of how you do these things, right? These are new things, right? It's kind of, it's like, hey, I want to invest in this thing. And normal client says, hey, I want to invest in this. I need to make a good return. Make sure you protect that return. And, so the guys, the investor, the manager doesn't go and steal my money, right? Okay, that's hard enough, right? And then add to that this idea that, all right, and while they're doing that, I want to move the needle on this climate change issue, right? It is kind of, and we need to measure that, and we need to understand how this investment is performing along the impact axis as well as along the financial axis. And then the third piece of it, right, which is a little bit about what we were talking about a minute ago in terms of conscious business, right? Kind of, some people call this ESG. The way I think about it is, your organization, your business, your investments, et cetera, you can have impact in the results of what you do. And you can also have impact within your organization, right? Kind of in terms of how you run your organization, how you treat your people, how you, what decisions you make, right? Whether, in the proverbial factory on the riverbank, right? Whether you're pouring toxic waste out the back of the factory into the river, or you're making a decision to follow the law, or even if the law or regulation doesn't exist, to say, well, actually, I'm a conscious leader, I'm a conscious organization. Even though I may be able to get away with socializing the costs of my production, right? Cost me, X dollars to produce this chemical in this, overly simplified example. It'll cost me X plus Y to dispose of it properly. And so how do I think about how I'm going to run that business, right? Like, this is this impact inside your organization. And then there's the impact outside, and so, I make solar panels, I clean up the ocean, you've got ocean plastic, I do, whatever, any of those things, that's impact outside of the business, right? So these ideas that, you can do this internally, you can do this externally. And we have a lot of experience working with folks who are doing each or both of those things, right? And so, and then now let's bring in like just a tiny little bit of like the wonky legal technical stuff, right? The idea is simply that, all right, well, how do I know, right? As a business owner, as an investor, you're just saying, all right, cool, Mr. or Mrs. Fund Manager, or person who I'm going to buy goods and services from, or somebody who I'm going to hire, or et cetera. You say you're going to do all these great things. How do I know, right? Law basically helps provide the answer to that question, right? It gets back to that point about authenticity, right? So, maybe there's a contract, maybe there's regulation, right? Maybe there's, market expectation. Maybe there's, there is kind of a moral hazard, right? There's all these different levers that one can use to help inject a high degree of trust. And importantly, when I guess when they say trust, it's trust plus verify, right? That's the law, right? That's contracts. That's so that's kind of very simple, right? But all of this stuff operates within a complex legal and regulatory environment, right? The tax man, right? The IRS doesn't care, about, how well you are intended, right? There are very clear rules. The SEC doesn't care. It's like, if you're issuing securities, you better follow the rules, right? If you're going to be making statements about what your investment is going to do, you better follow the rules, right? So we have backgrounds in these legal disciplines. And what we do is we work with our clients to help them navigate this stuff, this complex terrain, to do multi-dimensional, multi-bottom line things. So that was a long answer to your question.
Yeah, I mean, I like it, but so I guess the broader topic is kind of blended finance. And so, I mean, from where I sit, I'm on behalf of my clients, many times I've been in a position to kind of self-select funds. So, right, if a client says job creation and disenfranchised communities is important to me, it's my job to go out and find those funds and make sure they're reporting back. Yep. But the situations you run into and that we talked about are quite frankly more technical.
Building those funds. Yeah, right. We're building the funds that hopefully, you will, bring your clients to, because it's a structure that works. There's a strong degree of trust that's built into the relationship that we're building the foundation for. There is a clear and efficient path towards value creation and distribution because it's an efficient structure, right? These are the concepts that we're trying to build into the structures with a view towards, hopefully, folks like you who are advising these visionaries on what to invest in, where to invest, how to achieve those objectives that they have through their portfolio in this particular instance, right? We're kind of oftentimes in the role of the technician as well as kind of the strategist, right? The architect of, all right, well, we understand how these things work, right? We're going to use this structure to achieve multiple bottom line objectives. You talked about blended finance, right? Blended finance is a field in which there has been rapid and significant growth and development because it can be a very powerful tool. Just to define what I mean by blended finance, what I'm talking about is are a whole host and variety of legal structures and arrangements that are built to bring together players who historically have stayed in their own sandbox, right? Philanthropy and private equity, sovereign government and private foundations, for-profit seeking investors and charitable impact seeking not-for-profits who happen to want to do investing, right? These are folks historically that didn't, need to or didn't have much reason to work together or to live in the same entity, to live on the same cap table, to operate within the context of the same fund or the company, et cetera. Now, with impact and the common language and the common intention that impact provides, right? This idea that as a venture capitalist, I see a significant market opportunity in solving a challenge, in a literacy challenge in a developing market. And you, as a philanthropist, have it as your mission to increase economic mobility, and you understand that literacy is critical to doing that. Now all of a sudden we have a reason to work together, right? But the tax, regulatory, kind of the infrastructure, right? Like the advisors that advise public charities and private foundations, and the advisors that advise private investors are totally different folks, right? They don't speak the same language. They, oftentimes historically have been skeptical of one another. These are challenging things to be able to do. And so how do you bring these groups of folks that used to live in different sandboxes and are regulated totally differently? And by the way, we have a tax regime that enforces a distinction between for-profit and not-for-profit, which is, it's a whole nother conversation, but it's kind of nonsensical, right? Because I can name you and I can sit here and rattle off probably 100 extremely well-heeled not-for-profits, and 100, just off the top of our head, for-profit organizations that are struggling to turn a profit, right? That distinction is arbitrary, but it is what it is. The point is we have to live in that reality and help people who are trying to do compelling and important things in the world navigate all that complexity and get to an outcome, right? That's blended finance, right? So, blended finance, it's not an asset class, it's not a discipline, it's a tool that helps people kind of just get from here to there. That's it. But when that tool arrives on the market, you, as an advisor, as a wealth advisor, will see these things and you'll see it as a fund, right? Or you'll see it as a product, right? An investment product. You'll see it as a company, right? An operating business. You'll see it, in these kind of relatively traditional, recognizable forms. When you look under the hood, you'll see, oh, wow, okay, there's a lot of really funky stuff going on here, right? And that's the role of, other, lawyers, sometimes we're on that side of the table as well, by looking at this thing and say, all right, well, this vehicle that was built was trying to do something. It's supposed to get from here to there. And then you look at it. This is the diligence piece, right? This is what we've been talking about when we were talking about kind of, don't just take it for granted, check it out and see, right? Is this just a bunch of BS, or can this thing really get there, right? Is this just like a clunker that's painted green, or is it actually gonna, get to a desired outcome in an efficient and an effective way, right? And so these are the roles for sophisticated advisors, whether they be wealth advisors, lawyers, accountants, consultants, you name it, who understand and can help people navigate this space. That's the role, right? Is to understand these things, understand those multidimensional objectives.
Again, people can throw questions in the chat or in the Q&A. Love to see some audience participation. Chintan and I can sit here all day and talk, but it's good to have some other people weigh in. So yeah, I'd like to take that a level deeper, and maybe if you have a specific example in mind. I mean, for me, I've got clients that are pretty diverse, and one client in particular came to me, a decade ago and just said, "Hey, look, I'm not a linear thinker. I don't know what it looks like, and I just want to see better things done in the world. And what's funny with that is that specific client that I'm thinking of is that they ended up making an investment in Vital Farms, the pasture raised egg company.
Yep.
And, in my mind, it was a long trip to get from anything goes, just bring me the good stuff, to
Right.
finding a company like Vital Farms, and making sure that all those, guardrails are in place, that, I had the great benefit of sitting down with the CEO and finding out just how he ticks, and like hearing him talk about animal welfare and about this whole stakeholder mentality and how he's paying his farmers more than anybody else in the marketplace.
Stewardship of the land, and they have done a lot of really pioneering work in a very old industry.
Yeah. So from your perspective and sort of building these funds, is there one example that comes to mind where blended finance was able to create opportunity to create a big change that your clients were really impressed with?
Yeah, you're asking me to choose among the favorite children, right? So I'll give you a couple examples, but before we dive into those, I will say that the point of this, right, the point of blended finance is to unlock value that has been tied up, right? That there is a roadblock, and blended finance is in some ways an effective tool at getting around roadblocks, right? Building a blended vehicle is a tool that helps de-risk something that was otherwise not investable. But now, because different folks who have different return expectations, who have different risk profiles and parameters, can all work together in a consistent and concerted way, that is an incredibly powerful way of unlocking value. That's an incredibly powerful tool in unlocking value. And so, a couple examples that come to mind, right? So if, one in the category of social justice, economic mobility, domestic, right? Kind of the challenges that we as a society are facing, right? Like who's investing in those? There's a lot of people doing great work. One in particular that comes to mind, one of my favorite matters in this last year that we were able to help work on is an investment fund called the Ruthless for Good Fund, which is a venture strategy investment fund that invests in effectively amazing, incredibly talented entrepreneurs who otherwise are being overlooked because they live in the wrong zip code, because they didn't go to the schools that everyone, all the VCs are at, because they look frankly like you and me, because, or more poignantly, right, and kind of particular focus for Ruthless is because they're women and they are, haven't been taken seriously by, investors, et cetera. This idea that, Aaron Walker, the founder, it's not his quote, but he's made it cool, I think, like many of the things that he does. This idea that opportunity is just, it's not distributed, right? Opportunity is highly concentrated, but talent is widely distributed, right? Talent is everywhere. Opportunity isn't, right? So Ruthless for Good is a fund that is focused on backing these folks, right? Now, to make this opportunity happen, Ruthless for Good fund is a blended finance vehicle in that it was incubated by Camelback Ventures, which is a not-for-profit fellowship program. It's like a, Y Combinator, Techstars, right? This kind of thing, but it's focused on this particular entrepreneur set. They're based in New Orleans as opposed to Boston or New York or San Francisco, right? They find amazing opportunities, they find amazing entrepreneurs, and thereby opportunities for investors to invest in, to partner with, in all these other kind of areas that people just aren't looking, right? And so, and they have this amazing, kind of incubator fellowship program, which really kind of drives a lot of value to these folks. And that, Camelback, has been doing and will continue doing really great work, right? Ruthless for Good Fund, the time became ripe just this year for it to be able to launch an investment fund, which was a very successful, first close and, continuing to move forward because of the groundwork that was laid by Camelback, right? And so this idea that you need partnerships between philanthropists, between state and local and federal and international government and non-governmental organizations. The fact that you need partnership between investors and entrepreneurs and intermediaries and gatekeepers, right? Like all these different stakeholders, in this ecosystem. If you start thinking about people in that way, you start seeing ways in which, they can come together, right? And another example that, one that brings together like this broader set, people like, these categories that I was describing is one that I've talked about before in other instances, but such a great example, which is Circulate Capital's Ocean Fund, right? And so this is a fund that is focused on remediating the problem of ocean plastic, right? Plastic that is leaking into the oceans and destroying habitats and, creating untold damage to our global oceans. The idea is that if you're going to be able to move the needle on this problem, you have to be able to bring market-based solutions to the problem, right? It has to be something that can be investable, that investors can naturally gravitate towards and make just a good investment and make a strong and healthy return because there is important and valuable work being done. But to create that, to unlock that, it doesn't, it's kind of starting from nothing, right? So for that to exist, the Rob Kaplan, who's the founder, and an absolute visionary, recognized that you can go to the makers of this plastic, right? The folks who, have a significant interest in helping solve this problem that they, arguably, at least in part, are responsible for. In fact, by just simply by virtue of the fact that they use plastic products, right? We're all responsible for this. That's very clear. But there are folks who are super keen to make a dent in this challenge, right? And to bring on corporate, very thoughtful, visionary corporate investors who recognize that these are investable solutions, but you need folks who can take a longer time horizon on investments, right? And so, if you're a 100-year-old company, you have a longer time horizon than maybe you or I might have, Mike. In addition to, to corporates bringing on family offices, bringing on, the U.S. government through a USAID loan guarantee program. They're bringing on, to working very closely with the Ocean Conservancy, right? This was a massive, and it continues to be a massive group effort to continue to push forward, solutions to this problem. And Circulate has made a number of really interesting and compelling investments in technologies and companies, in infrastructure to kind of build what are right now and will be scalable solutions to this problem. And hopefully one day, clients of, investment advisors and managers who I would say even are more Main Street than you are, right? You work with a very, I guess, elite type of a client, right? But, folks, more like me, when I'm investing, if I could invest in something like that, and that, and it just meets my return expectations for this asset class, et cetera, absolutely, I would love to, right? And so the work that we're doing here is to eventually get there. And if you get there, now all of a sudden there's millions and millions and millions of people who, if they are into this, are they're attracted by the impact and the return possibilities, et cetera, they'll have an opportunity to make a dent in this thing, right? But a lot of that pre-work has to be done, and it takes a complex and large and dedicated team of stakeholders to start to lay that groundwork.
Yeah, I'd agree. One of the reasons for the smile early on was Rob Cap when I attended one of his circular economy days, and it was embarrassing how little I knew about recycling going. And I was like, oh, I thought I'm doing all the right things. And then you hear an expert on it tell you like, oh, no, here's what you really need to be doing. And if you leave, like one of the takeaways was just like leaving water in a water bottle that you put in a recycling bin is not a good thing.
No, it's not a good thing. I know.
So,
you know what's funny though is it drives me nuts now when I see it, because now that I know that, it just personally it drives me nuts.
So we just had a question come in the chat. I think it's an interesting one. And it goes, once you move to a stakeholder capitalism model, how have you seen founders or investors balance multiple, often competing stakeholder priorities without losing direction? I have my thoughts, but I'd love to hear yours first.
Yeah, absolutely. I mean, so the direction question is a really good one, right? Kind of, you actually mentioned the term mission drift earlier, right? And so the first of all, I really appreciate the question because it is an incredibly important question. It recognizes an very important reality that this is complicated. It's hard, right? It's a lot easier to just be singularly focused, right? Just say, listen, all I care about is the bottom line. I need to hit an 8% IRR, and that's all I got to do. And that, as we talked about, is hard enough. Right. But then to say, all right, I need to do that, and I need to do this and this and this and this and this. Right. So when I think about it, when I'm diligencing, opportunities, for myself or, on behalf of clients, one of the things I think about, and it kind of comes from this perspective of how challenging it is. One of the things I think about is how aligned are those objectives within the opportunity itself. Right. So one way of thinking about it is, there's certain models, there are certain strategies, certain approaches that effectively say, all right, we're going to have a regular business over here, right? We're just going to make widgets and sell them, right? And then we want to have an impact. So then we're going to take some of our profits and we're going to invest, we're going to do something impactful with it. Or we're going to take one of these widgets and every one we sell, we're going to give one away, or this kind of thing, right? That, I question in many instances whether that actually is impactful. But putting that aside, let's assume that it is, right? It's also complicated. It's an additional level of complexity. Maybe that's the business you want to invest in. So be aware of that, right? Think about that, understand that, right? Or if that's the business you want to run and that's the model you want to have, understand that there's complexity in that. There's another model, another approach to the model, which is kind of this idea that impact is baked into the DNA. Whereas just inherently by doing more, by selling more widgets, this business itself will move the needle on an impact outcome. So you can think about businesses, you can think about, let's talk about, a lot of times people go, yeah, okay, well, if you're selling solar panels, yeah, I guess every additional solar panel you sell. But that's the easy example, right? Let's talk about something that's, it's not selling something that is inherently impactful, right? You can talk about a law firm or, a consulting business or a wealth advisory firm, right? It's harder for these kinds of businesses to make that case that they're impact businesses, right? But if it's baked into the DNA of that organization, that employee welfare or community citizenship, or, you name it, right, are built into why they exist, it will then affect how they do what they do. It'll affect what they do, what they're, engaged in, et cetera. You can look at lots of businesses. I mean, Patagonia is a good one that comes to mind, right? Patagonia sells stuff, right? Is a puffy jacket, puffy down jacket from Patagonia, all that different from XYZ company, right? Patagonia is a company that has made it very clear that they stand for something. And that thing includes employee welfare. It includes environmental stewardship. It includes evangelizing and helping bring forward these ideas of conservation and sustainability, et cetera. And you see that in what they do, and you see that in how they do it, right? And so you could argue that given that this stuff seems to be well baked into the DNA of a business like that, the better they do, the more puffy jackets they sell, the more impacts there will be had along these lines, right? That's one perspective on it, right? But the more direct answer to the question is, this is where you really get to the trust but verify point, right? It's like, oh, you told me you're going to do this and that and the other thing all together. All right, cool. Let's see, where does it say that? And not just where does it written, right? But when you look at and you think about the structure, does it even make sense, right? Is there inherent alignment? Is there accountability built within the structure, right? And anyone can just take a regular document and then put an appendix on the back that says, oh, and by the way, you're going to do all this extra impacty stuff, right? That's not the best way to do it, in my opinion. In my opinion, the better way to really kind of help figure out whether this is actually going to happen or whether it has been happening is to look within the company and say, all right, well, does it cost the company X to be able to do all this extra stuff, or does it drive value towards the company? And how are these guys thinking about that, right? Because these are these alignments, right? So to Tatiana's question, really what I'm getting at is this idea that you're looking for alignments. You're looking to create alignments, because the better alignment there is between the various different stakeholders, between the various different impact, financial, social justice, climate, related, whatever bottom lines that this company is trying to achieve, or as an investor, you're looking to return, to receive a return on. The better alignment there is, the more likely that you will actually achieve those things, because you're not working at cross purposes, right?
Yeah, no, I was just smiling because I'm thinking back to my Vital Farms example. Like Matt O'Hare's goal is sell more eggs, right? And how do we get from from A to Z?
Yeah.
You sell more eggs by making better eggs. You make better eggs by treating your chickens better. And this is demonstrable. He can show you with his little color chart that he walks around with. And then how do you get the best chickens? You hire the best farmers. Oh, how do you get the best farmers? You pay them a little bit more. So all the daisy chains, all the steps along the way are aligned. And
it's
that
a
made
value creation mindset, right?
Yeah. And that made it very easy for me to sign off on, promoting that to my clients. And then, and also he's just a great guy and really cares about animal welfare. That's all. We could spend just an hour on that.
Absolutely. No, it's a brilliant example.
Yeah.
And, this is a company that IPO'd very successfully. Yeah. I mean, it's a success story, in so many respects.
Yeah, definitely. Well, we're up against time, and seeing no more questions, I'll let you get back to work, and I'll go make some more client calls.
Yeah, sounds great, man. Great talking to you as always. Thanks so much. Sorry to everyone for the technical difficulties sometimes in Zoom world. I guess these things just happen, but I'm super glad that we were able to kind of work through it and still have a really fun conversation. So It's been a pleasure.
Great. Hope to see you again soon.